Good morning, traders. Thanks for joining me today. It's 8:01 a.m. Chicago time on Thursday, the 11th of April, 2024. This is episode number 2655. Quick reminder that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's take a look here at what we've got today. Overall, mixed market this morning. There are a couple of drivers. I'll go from the top. The overall themes, again, mixed risk sentiment this morning. We had Fastenal announcing earnings this morning. It's not really that hot, and the hot part of the earnings season. So I'm not going to get into depth there. You can look that up. The major themes are, of course, the hot U.S. CPI yesterday really pushed the market to reprice the possibility of a rate cut in June and the number of rate cuts this year. Remember, we started the year with an expectation of a March cut, and that expectation has been shattered. March is behind us. Nothing has happened there. So the market's still, dealing with a Fed that's insisting that it's going to be data driven. So the data is really important. But overall, risk off sentiment yesterday. The Fed is now expected to cut not 3 but 2 times, and there are actually indications that they may only see 1 cut. So higher for longer is what's on deck, it seems. Odds of June cut were at 60% before that CPI release. They are now at 21% per Fed Fund futures. You can find that through the Fed Watch tool on CME's website. The cut expectation has shifted to September meeting, which is not that high. I think it's in the 40%-ish. Here it is. So we are at 525 to 550. So 26% probability priced in right now for a September hold, and there's a higher probability of a cut. 45.3%, and that's what the market is pricing in. If you look at June, let me move my face here so you can see. June, if you look at last week, it was around 60%. Yesterday, it dropped to 16% for a 25 basis point cut. It's holding steady at 20.3%. That's really why that's a strong indication as to why the market is repricing. These are strong pieces or data points for the market to deal with here. So that's where we are. Chinese CPI remains soft, so there's room for the government, for the PBOC to act to support the economy. U.S. dollar is quite strong. Notice that it's holding steady at basically 105 on the dollar index, which is traded on ICE, the DX product. That's an indication of a dollar that is remaining strong, which is likely to be problematic for equities. OPEC maintains the 2024 world demand outlook. That report was anticipated for today. ECB holds rates steady. They came out this morning with their rate decision. Currently, I think Lagarde's still speaking in the ECB conference. U.S. PPI comes in softer at 0.2 versus 0.3% on a month-to-month basis. Core PPI was in line, so that's a little bit supportive this morning. Initial claims were weaker. They came in at 211,000. Let me check. Yeah, 211,000 versus 215,000 expected. So the labor component still relatively strong. still relatively strong. The ECB conference at 8:45. Yeah. So what do we have left? We do have some comments from Feds Williams that came out about 15 minutes ago. We have Feds Collins at 12. We have Bank of England's Green at 12:30. A 30-year bond auction. You want to pay attention to the auctions currently. These are going to give us a pretty good indication of what the bond traders are thinking. The smartest people in the room, basically. These include sovereign funds and things like that. So how a bond or a note auction is subscribed tells us what the future expectation on interest rates are on the street. Fed's Bostic at 1:30. Unemployment out of South Korea. An interest rate decision out of South Korea at 7 and 9 p.m. Balanced trade from China at 11. The export and import numbers distilled from that report also at 11. The S&P is in a multi-distribution price discovery condition this morning, auction condition this morning. The volume is pretty good, 312,000 contracts, with the inventory being negative 29% more short than long inventory. The range is pretty good too, 44%. 44%. So overall, we have a market that's pretty, has a spring in its step this morning. Yesterday we did leave. We'll look at, let's take a look at the technicals here. By the way, I became aware, I was told that the entry form for the Trader Bite Out campaign, a reminder to everybody who hasn't been here and hasn't heard, there are 2 more Trader Bites left, and then it is going to be shut down. So for that, we've been doing this giveaway. Just to kind of end on a high note, give something back to you guys. And the giveaway is Monday, Wednesday, Friday. We're giving away a $100 gift card. That's a Visa card, plus a 3-month Edge Pro X subscription that's worth about $105, something like that. To one winner. And on Monday, the 15th, this coming Monday, we'll have the last show. We'll have the last live stream, and during that show, we're going to draw for a MacBook Air worth about $1,200. We'll ship that to you as well. To participate in this, of course, you need to go to ft71.com/TB out. If you have problems, getting your entry in, I understand there's a problem with the form. If you have problems getting your entry in, let us know. In fact, let's fix that issue right now. It may say that you've already entered, and just let us know. You could send an email to info@futurestrader71.com, and we'll handle it. Shouldn't be a problem. You can go there now and apply for Friday's giveaway tomorrow, and we'll announce the winner on Monday morning. So that's it. While we're at this, let's announce Wednesday's winner, yesterday's winner. It is Shark. Shark, if you're out there, raise your hand, take a bow. Shark, you're going to be contacted by someone from EdgeClear to arrange to get this gift card to you. You should be able to enter. Refresh the page, ft71.com/TB-out. You should be able to enter. Let me know here if you can't, and we'll get that fixed pronto. Something going on with that form. Okay, so let's take a look at the market here for a minute. So what did we have yesterday? We did end up opening in a gap lower. We did sell off on Tuesday and ended up kind of crawling all the way back up, as we could see there, and ended up finishing pretty strong, actually, stronger than I would have expected. And then yesterday, still can't enter. Make sure you refresh your make sure you do a hard refresh because your browser may be caching the old form and it's causing a problem. Or try incognito or in a private window to enter. Again, ft71.com / lowercase tb -out. It's also linked at the top of your live chat. Okay, so yesterday we come in here after pretty hot CPI, and we've gapped down. The market sold off pretty good, and we end up opening right on the edge of what is this kind of middle balance zone that, and I talked about the expectation yesterday that we're likely to do a flutter and expect it to trade between 5,200 and 5,240, somewhere in that range, really 5,235. And what it did is it opened, it was pretty much in balance on the open, and then we finally broke out to the upside to 52.26, and we saw an excess high in C period. And to me, once it falls back inside of the IB after leaving that excess, you want to stay off the long side. You want to look for opportunities for it to test the other side of the IB, and it becomes a play for neutral, which only has a 27% historical probability, somewhere in that range, according to our market stats reports. And so you're shooting for the other side of that, which gave us about 25 points of range there. So what we ended up doing is we ended up testing this lower line, which has been here quite a while. It's been carried over from this high back here at 51.85. So these lines have been here, all these green lines have been here for some time, since basically where you see the bar starting. And we tested the 51.85, bounced right back up, and basically held steady. So wait, do I have this backwards? Hang on. Let me... Okay, ABC, something, oh, yeah, crude. Okay, I thought I was looking at the wrong chart. I felt like I was looking at the wrong chart. So that's what we saw here. Lots and lots and lots of lifting into that high, the breakout out of the IB. It looked pretty legitimate on the pullback. The pullback yielded maybe a couple ticks before it fell through. But overall, this is why I monitor this chart here. I monitor what's happening bracket to bracket. And once it got back into the range, it became quite evident that it was weakish. You could see broke the full session VWAP, and it's just hanging steady. It's trying to get some traction in the middle, and then it finally breaks through, goes neutral, does not take out the low, the overnight low, and then just bounces right back up to the IB, and then you have ping-ponging back and forth. So yesterday was sort of a digestion day for for the CPI report. And again, this is a major release here, and overall the market didn't really do much. We ended up closing and settling inside of the IB on a neutral day, and since then we open back up and we have the same kind of story. Pulls to the IB low, goes back up to settlement, and then falls, checks below, and then ultimately ends up turning all the way up on that CPI release. CPI release, as I said, came in softer than expected, 0.2 versus 0.3, and the market kind of bought it back up. A lot of price discovery going on. So where does that leave us for today? Given the posture that we're in, remember, yesterday is did not establish one time framing down yet. Today would establish one time framing down if that high doesn't get taken out. But because we pushed into the 5222 this morning, what we are doing is actually pushing into the excess, pushing into the excess high from yesterday. And so we are likely to open in that excess high. Now, again, if the market has found sellers, which it did in C period yesterday, breaking the IB, pushing higher, we had really good lifting into that break higher, but it hit a wall and it came right back into the IB. Right there, it's that's an indication, that's kind of a clear look at the fact that there's a selling interest, right? So this is just one of the most obvious signs that sellers have stepped into the trade, and we want to take notice and keep track of excesses. And so as long as that IB high stays in place, we're good on pushing back to settlement, and we're good on testing the value area range of yesterday. So 52.11 all the way down to 51.95. So this is the play today, right? 52.11. Can't write with the mouse today. 52.11 to 51.95. As long as that excess stays, we are trading right at the IB high yesterday, right in that excess, right? The IB high was around 52.16. We're at 52.17. So the question is, the first thing I want to see today, and this is one of those rare opportunities where I might see a setup within the first 15 minutes of trading. Generally not interested in the first 15 minutes to a half hour of trading of the cash open, because the other time frame tends to be active during that time, and it could really be a bad start to the day. But this is one of those circumstances where I want to see, what are you going to do with that excess from yesterday? Are those sellers still there? And so are you going to push back down into value? And if so, then we are going to shoot for the classic value area setups. We're going to look for support at 52.11. No support at 52.11. Let's see it down to settlement. Pretty high probability test of settlement. 52.0775 is pretty tight. And then a very, very likely, if we push through value high, very likely to push back to the point of control. The point of control, the TPO point of control, is 52.05. So the trade is from around 52.15 to 52.05. 52.05 does not get a response at the point of control. It's relatively blunt, so I don't expect it to get a response. It's not really a sharp fight there from yesterday. Then I'm looking for 51.95. So the trade is as close to 52.15 as possible, holding for a test of value high, P settle, point of control, all the way down to 51.95. Once it gets to 51.95, if it continues going, great. If it just goes sideways from there, so be it. That's the main trade of the day. We do not have an excess low from yesterday, which to me, I'm reading that as that's, gun to my head, it's the weaker side. This is very likely to want to go check and make sure that there are no sellers down there, that there are only buyers are left, and then we'll start to see a market that turns up and pushes right back up into 52.60, 52.50, that area, and then potentially repairing what was left behind up here. But for now, we are in this big balance zone here. So the potential for outside in trades is more common than breakout trades or trend trades. Recall that the range so far today is quite good. The volume is there. And we're seeing, pretty much across the board, if we look at our relative indications sheet here, we're seeing really good numbers. Look at those numbers. These are good numbers across the board. So it doesn't matter what index you trade, you have good relative range, good relative volume. We have good relative range and volume in crude, like it's marginal, but gold is sitting sideways, so staying away from golds for now. More interested in the indices and potentially crude on a very limited basis. So today it's just focusing on the S&P, NASDAQ, RTY, and so on. Okay, so that's what I wanted to leave you with. Looking at the NQ, similar story. The NQ was a lot more balanced yesterday. It's a lot more choppy. A lot of people must have gotten churned and burned yesterday. Pretty tough trade in this product yesterday. Not as clean. I mean, although the S&P was not very clean, the NASDAQ was more unforgiving, I think. It's just one of those things where you just need to come up with a way, and I use the auction and profiling to determine it. You got to come up with a way to detect that the market is going into balance as soon as possible, as early as possible. Knowing what the market condition is the entire game for me. So knowing what the overall market imbalance is, so day to day, and then knowing what the current day's condition is. Is it balanced? Is it out of balance? Is it sideways, trending, so on? And then that tells us that kind of gives us an indication of what tools or what setups we're going to go for. And do we, the way I look at it is you have 3 cards on your table, on your desk right in front of you. You have a buy card, you have a sit on your hands card, and you have a sell card. I never want to have more than 2 cards on the table, ever. So I'm always pulling away the card that I cannot play, right? So this is kind of an imaginative thing that I do, but I'm always saying I'm pulling the buy card, throwing it in the bin for now, and here are the conditions required for me to bring that card back and make it available. If all 3 cards are available, then I'm prioritizing hands off. Otherwise, as soon as I pull one of the cards off, like, hey, I'm not going to be a seller here, then I'm looking for buy or neutral position. In other words, sitting on my hands or buying. And that's how I'd like you to see it. I'd like you to see a market where you don't act when I could be long, I could be short, I can make. No, that's not an edge. That's not an edge at all. That's just FOMO. There needs to be a clear indication to me that one of these cards needs to be pulled off and put away, and I can only be long or neutral or short or neutral. Then I can monitor the action more closely, go to my trigger chart and wait for setups that support that bias. I cannot overemphasize how important what I just said is, because most folks come in here open to being long or short or trading NASDAQ or crude and just jumping around. They're just looking for 2 ticks of gain for 3 points of loss. It's unsustainable. This is not how traders should trade. It's unprofessional. So this is a key thing to understand, is that your first and most important job is to figure out which team are you on? What side are you going to throw a punch against? Which side are you going to fight on the side of? Is it the buyers and the sellers? It's a rumble. It's a fight every day. We're getting in the ring and the octagon, and we're going to fight. Which side tends to throw the better punch? This is what we're looking for. And we're creating our indication against the open against the prior auction, our indication of the open versus the overnight auction, what the overnight auction is indicating, what the opening swing is. Some people use the opening range, 30-second, 1 minute, 5 minute, 15 minute, the initial balance, All of these things. How are the brackets rotating against each other? These are all tools and ways of trying to detect as early as possible what side is what. Good luck today, and I'll catch you tomorrow. Don't forget to enter the giveaway for tomorrow. It starts today. Good luck.